Greetings, traders. This is Mohan here, and good afternoon. Good afternoon on a Wednesday. Today is the 23rd of November, or 2016th of November. I'm jumping the gun here. Sounds like I'm getting ready for Thanksgiving or something. Welcome to our session for today and to this great time of the year, wonderful time of the year. And we have got a lot to talk about today. I'm going to record this session for the first hour. And if I can just beg your indulgence, as you know, usually the first hour, I just talk about the markets and Boomerang and how we can make more money, which is the goal of Boomerang and trading itself. And also, after that point, I'll turn the recorder off. We'll have it on tape. I think there'll be a lot of valuable things you'll hear about today. And then we will go into the question and answer period, which I'm always happy to do. Now, as you know, before we get started, I always like to let you know that anything I show you in the room here as far as trade signals or all that, they're all hypothetical. We have to consider them hypothetical because obviously they're not being taken live in an account right now because, duh, the market's closed. But at the same time, it's important to understand that we like to follow the compliance rules of the industry just as if we were brokers because the reason is, futures trading is so risky, and although there's a lot of promotions out there and everything, we just need to remind everybody over and over that only risk capital should be used. I get a lot of traders, as you know, thousands literally over the years that contact us, and it still surprises me after all this time how many will approach us with their last $5,000 and say, I want to buy Boomerang and trade. And I say, well, that's okay. What you can do is just take give them a lighter version way to start out. And there's nothing wrong with that. You got to start by learning. But I always warn them, do not start investing in futures unless you have, as it says here, risk capital. That's money that can be lost without jeopardizing your financial security or lifestyle. In other words, make sure everybody in the family is taken care of, you're taken care of first, then take a look into futures. Anyway, with that having been said, I really thank you again for joining with us today. I always want to make these sessions as valuable as possible for you to learn how to make money trading the futures markets and indeed in investing in the markets themselves. As you know, I've been trading for coming on 27 years now, and it has been an absolutely amazing and wonderful journey. I wouldn't trade it in for anything else in the world. It's just a very exciting business to be in. But remember, it is just that. It's a business. Not any different. I often use the example when I talk to traders about my very first job was as a pizza delivery guy. I was 16 years old. I was all happy. I got my first job, got a little money in my pocket. The tips were good. I was delivering pizzas down in Newport Beach, California area. And oh my God, I delivered pizzas to John Wayne and a bunch of movie stars that lived down there, and Fleetwood Mac and all kinds of people. It was a very happening time of the season, back in the 60s and the early 70s. And the point is I learned all about the pizza business then. I learned how to, make the pizzas. Certainly I knew the delivery because eventually I got promoted to delivery manager. Well, beyond that, I started realizing that it really took an initial capital investment to build you rent a store. Now you got to build out the pizza oven in there. You got to haul that equipment in and you buy the equipment and you get it installed. All that costs a lot of money. Now you've got to get the phones ringing. Ultimately, you've got to buy the dough too. You got to have a lot of dough, and you have to know, of course, how to combine everything. But you got to have a nice built-in freezer too. Beyond the oven, you need a freezer because you got to store the dough that's pre-mixed along with all the ingredients. I'm getting to the point here very quickly, and we'll go over trading. But it's so important, and so many traders miss this. This is a business. When you have a business, you have to invest in the business. You have to get the best equipment you need to make sure that you can run that business professionally. For a pizza parlor, you can buy used ovens and using, but for futures trading, forget it. It's like being a surgeon. A surgeon, you don't want discount or secondhand equipment. You want the top of the line, best equipment when you're going in, and that's what we offer with Boomerang Day Trader. We become world famous for doing just that. But the main thing about Boomerang is that all we care about is simplicity and making money. That's the real unique feature of Boomerang is not only does it make money, but the setups are very simple. You know, it surprises me a lot of times. I look at the things that are out there because I've made it a hobby to look at just about everything that comes across my desk and indeed research different things. And these things that are out there that they try to give you to trade with, these vendors come up with these things. Some of them are, I would say most of them are just so darn complicated, and they don't really tell you where to get in. They kind of vaguely hint at it. But for example, if you look up here at this crude oil chart, these yellow dots are sell signals. You see these? Those are sell signals on a pullback to our this key vital trade signal line in here. And the point is, if you have the right setup on the dynamic trend bands, those pullbacks to the signal line in most cases are going to make you money. In fact, we're the only system in the whole world, and in fact, the history of the stock market that guarantees 90% winning trades. And again, I'll go over that in a minute. But quickly back to our example of running a business in the pizza parlor. So now you've got your pizza parlor up and running. You've invested 20, 30, 40,000 in the equipment to put in the normally a rented space in a shopping mall or something like that, right? And you've got a good deal on that, but you've got some capital invested now. You've got your time certainly invested, but you've got your capital invested, and you need to run that business. So now what do you got to do? You got to install a phone system because you got to get those phones ringing. You got to get the delivery orders coming in, and you're hoping for walk-ins. But most pizza parlors, unless they're one of the major chains that have a nice little cafe restaurant setup, they rely on phones for delivery. You know, so their walk-in facility is there, but it's not the main thing that they do. Anyway, the point is that's running a pizza business. It's very involved, but you have no guarantee those phones are going to ring. And I'm bringing it to a major point here. You don't know if those phones are going to ring, and at the same time, you don't know that all of a sudden, because I've been through this when I was a kid. You don't know that all of a sudden things are really slow and you send one or two of the drivers home. It's just you and one other guy there, and you're hoping he's going to run all the deliveries at night while you stay there and kind of manage the phones and everything. You don't know if you're going to get absolutely bombed just out of nowhere. And I've had that happen where all of a sudden some sports event comes into town or a game comes on TV or I don't know, or I forgot about something and maybe there was a award show, you know, the Academy Awards comes on, I completely forgot about it, and you're just going to work la-di-da-di-da, and all of a sudden you go, what the heck is going on? Our phones are ringing off the hook. I got five people on hold. This is a true story. Five people on hold, one phone in each hand. I'm going, okay, now it was a, you know, you wanted everything pizza, large. How many? Oh, three. Oh, I thought you said two. Okay, two, three. You're writing this down, and you got all these people on hold, right? You're bombed. Now, to the point is, that's running a business that the environment, here's the key, that the environment can change on a dime based on input and information or a story coming in, maybe a news story or something. Well, welcome to the wonderful world of the stock market where every day practically that environment will change because the variables are so huge. A pizza parlor, your phone start ringing off the hook. You forgot it was the Academy Awards night. People are at home. They want to order in a pizza, sit and watch the Academy Awards and cheer their favorite stars. Pretty much kind of a one-off event situation that you forgot about or something. You came to work just thinking to be a regular day. You forgot about it and your phones are ringing off the hook and you're even a little tired when you came in and all of a sudden those phones are going nuts and you got to step up. You got to step up and make it happen. Well, you got to get on the phone while you're trying to get the orders in, and you got to desperately try to find those other two drivers. You're like going, get them back there because they got 10 orders up. Each of them got 10 orders going in all directions. Anyway, so the point is, we just had a presidential election, and those occur every 4 years. Well, 4 years, it'll plenty of time to forget that everything's just the same old thing, same old rigged up markets getting propped up and pushed up and jammed up higher and higher and higher, and then they finally get it to a certain point and they collapse and they get hammered. How often have we seen this? Or in the case of this last January, where the Federal Reserve who makes money off the money they print and give to us, was so desperate to raise interest rates because they had them cranked down to zero that they just keep pushing and pushing and hanging this carrot out. Oh, we're going to raise interest rates. They want to desperately raise interest rates. So they got real tricky after jamming the market up all of 2015. They thought, okay, we're going to try this in January. In fact, right after Christmas holiday, the exact day on January 2nd after that, we're going to raise interest rates and shove it down these people's throats because we don't care. We need our interest rates higher. Well, that's what they did in January. Just became a complete nightmare. It just blew out and just took off like a rocket ship to the downside. Unfortunately, that rocket ship crashed and went to the downside. Now you're probably starting to get my point. See the point between the phones? You weren't expecting it. All of a sudden they're ringing off the hook. You're flooded. Well, all of a sudden you're going along. You go, oh, you're used to the market's getting jammed higher, jammed higher. I'll just keep buying pullbacks on Boomerang. They keep jamming them higher. And then, uh-oh, they're getting a little overextended here. Watch for a crash. Well, sure enough, they added fuel to that fire by raising interest rates a little bit. And kablamo. Well, they haven't pulled that stunt again, and that's because they saw what happened. So after jamming them higher again and jamming them up, they ran into a little problem. Well, the market started pulling back, and then they just kind of held the whole thing up. And then coming into this, we're just talking about the markets here. This is all vital to what we're doing, and it comes to a point of what we saw the last 2 days in trading. We came to the point where they were rigging them up and pushing them up and pushing them up and trying to favor the incumbent party. Not a political statement, just that's what they were doing. They're trying to rig it that way. We saw it on the news. Everybody knows this, that the whole thing was pushing very hard to keep the incumbent party in there. Well, lo and behold, in spite of all their upside rigging, the market kept dropping back, favoring a change. I mean, this is known stock market history that when you have a weaker market during the time of a presidential election, a lot of times the people will vote for the other party because they're wanting change. They see, they're easily influenced by the market. If the market's getting hammered, they go, "Oh, we need somebody else to work on this deal." Just the way it goes. It's 28, 29, 30 years of history in that. Anyway, the point is this. So, lo and behold, on the 8th of November, November comes in starting out super volatile. Prior to that, it was getting pushed lower, pushed lower. You read all the reports about the lower market, and it's been, what was it like, the lowest S&P pullback period in 28 years, I think it was. It was the worst pullback period in 28 years coming into mid-October into November. Well, finally, we got around to having the election, and the guy they didn't expect to win did. And aside from all the whole drama of all that, the stock market, again, another. This is why I'm excuse my voice here. This is why I'm saying I've been talking all day in my room. We're trading a lot today. The excuse me a second. The events of the market that were expected by a lot of people, which was gold up, market down. If Donald Trump wins, the market's going to get hammered and gold's going to rally for all their various prognostics that they had. Well, lo and behold, excuse me, that trade got too one-sided. It got lopsided. There was too many people on that side. Gold started rallying. I know it was one of my largest positions, and I started suspecting something, but I hung on. I saw the market going down, but I started lifting my hedge. I had a big hedge on my, I run a private hedge fund, and I had a big hedge using SPXU. That's an ETF that's like short the indexes. Excuse me again. A lot of voice activity today. Well, I started lifting my hedge. I just looked at things. I said, "No, this." I've watched the range of this SPXU. I go, "I'm going to start lifting the hedge." And I took, at this point, I still have some on because I'm waiting for another leg down to come anytime soon here. Not a big crash or anything, but just another pullback because we've had a big up move. But the point is, just when everybody expected this thing or that thing, the opposite happened. So I started lifting the hedge. This all leads to some very amazing points, and then we'll get into boomerang. And I kept the gold, but I started thinning some of my gold positions out, stuff that wasn't working as good as I thought it should. So I did okay on the whole deal. I thinned out my hedge, still got about a quarter of it left. I took 3/4 off, and in my day traders action live room, I was advising people along that same way about I just not advising them per se, but just telling people here's what I'm doing. You follow it. If you like the ideas, go ahead and try it out, take them, whatever. We've given a lot of trading ideas, and thank the mighty Lord, they've all worked out pretty good. In fact, all of them have been winners. I think for a couple of little things I had to clip for a small loss, but um, it's part of a feature of my day traders action live room. But and I would be glad to share some of those with you here today, but I don't want to take too much time with it. If you have any questions about it, maybe at the end of the session you want to ask, I can give you some really good income vehicles right now. Very safe income vehicles paying 7 to 9%. That's about 8 times higher than the banks are currently paying, so that's a pretty good deal. Anyway, the conclusion of all this is we just got hit by a tsunami. Not only did we have a presidential election, which is always a big drama, this one was the most weirdest one I've ever seen. Lopsided support of one candidate, and in the end, the other party beat that person and shocked the whole world. And now to this day, we're still getting riots and all kinds of strange things going on, which is whatever. That's a big whatever. I'm not going to discuss any of that here. But here's what the main point is: it affects the markets big time. Oh my God, huge time. It's scary how it affects the markets because we went from a rigged market for the last several years. It was jammed up and up and up, and they tried to make us think it was really bullish. It wasn't bullish. It was rigged and pushed up. Finally, last year, over the last 6 months especially, all these big billion-dollar portfolio managers and hedge fund managers, all the big ones, I can name them, but I don't want to spend too much time. 3 or 4 of them finally started saying the Fed's really rigging the market up here. They're out of bullets. They're out of bullets. You heard all kinds of headlines like that, but mainly they all cohesively agreed that the market was being rigged higher, something I've been talking about since 2001. Anyway, aside from that, that's not the point. The point is, after that scenario of rig the markets up, the new presidential candidate got in, and the market exploded like we've never seen before in the last 5, 6 sessions. It was just a huge bullish reaction instead of, again, the message is it was the opposite reaction what everybody was forecasting. The gold settled down. We got gold kind of hovering down around $1,220 to 30, 1220 to 30 right now. It's kind of just kind of calmed down. The crude oil's still getting pounded a little bit, but the point is, right when we didn't think, when we had figured it all out, right, everything stopped working that way. So here comes the ultimate point of what I want to say. The markets change every day. They change every hour usually, but usually during that day I can pick a bias and hand out the information what the bias should be, and I'll show you some examples of that. In fact, let me we're running 2 charts here: crude oil on Boomerang and the mini NASDAQ here. Now, this is a good way to set up your charts, and you can trade both these, and I'll show you how you can have a really nice living trading both of these. And just keep in mind that if you're working 2 deals, it gets a little complex sometimes if one of them's firing off and the other. So just be careful not to necessarily trade them both same time unless you feel you can handle it. The point is, all of a sudden, the last 2 days, now that the market's it's made a huge jump, right? Here's NASDAQ. Let me just scrunch this up so you can see what I mean. If we look back over this last period, this is a very tight 450 tick chart, so obviously to really make it show how much it's rallied, you'd have to take a look at a smaller time frame. But obviously, you can see just going back 14 days, they've come down. Nasdaq's jumped up substantially, and Nasdaq was not leading the market. Nasdaq was lagging behind. And again, just a little theory here, but remember, the whole jam primarily of this last market, literally since 2008 is when they really started pushing the rigging stuff during the so-called banker bailout, if you remember that. That's a whole story in itself. One of the great heists in America of all time. Anyway, the point is, it's been this upside artificial jamming, but lately, when the market took off to the upside, it was all more industrial stocks. It was more stuff in the transportation index was what was really taking off. The transportation index was really rocking and rolling, and NASDAQ was showing a severe divergence. And what does that mean? That simply means that people's minds changed. Their minds changed, and they saw that, wow, NAS, which the FANGs, remember, how they always got to have some goofy term, the FANG stocks, right? The FANGs. Well, the good old FANGs were getting fizzled out. They weren't really working that well. They got hammered. Coming to the point here in just a couple seconds. Take a look at the transportation index since the beginning of November. Right after the election, rocket ship to the moon. Because the new perception is the new president, Donald Trump, is going to do a massive infrastructure rebuild, a well needed and much needed infrastructure rebuild. You with me so far? So, what he had been clearly stating all along, all of a sudden Wall Street went, whoa, that's where the money's going. And the FANG stocks, and I'm coming to the conclusion right now, you'll be worth your weight here. The FANG stocks, as they say, those 4 or 5 major ones there, and the NASDAQ stuff was not really doing that well in the midst of all this because it was yesterday's market, let's say. Now, I'm not saying we can't happily and easily day trade the mini NAS. No way, not by any stretch. I'm just making a point. Did you see that stock in the transportation index? Well, let's just compare that with the cash NASDAQ here. Look at this, just so you can see the difference. See, these meetings are very important because we don't just talk boomerang. We all know how to trade boomerang, or most of us do. And by the way, if you're brand new and you're just joining us for the first time, thank you very much, by the way, for joining with us. But just bear with me. We'll get to boomerang in a second here. We'll answer all your questions. But many of our regular attendees to these meetings are longtime boomerang owners. Let's compare. Did you remember the stock? I kind of got rid of it, but you remember it went straight up at the election. Look what happened here. NASDAQ, coming into the end of October, started getting its brains pounded out, and all these big FANG owners and stuff were getting pounded. All these, what to speak of all of us, these big NASDAQ players were getting roasted. So all of a sudden, here comes the 10th. Now, notice the difference here. This is a daily chart. But look at, even on the daily chart, look at the whipsaw. Look at this desperate attempt, after getting their brains blown out on NASDAQ, yesterday's market index, all of a sudden, look at the whipsaw coming in. So finally, coming into, that's right, today and yesterday, they're kind of artificially trying to blast the NASDAQ up to catch up with the rest of the market. Today, the market started selling off. It closed down 54 points, but NASDAQ was up both yesterday and today substantially compared to the other parts of the market. So what does that mean? That means that right now, for some reason, as far as what the real inside scoop is, the NASDAQ guys, and there's some big players in there, they're trying to rig this NASDAQ up desperately to kind of play catch up a little because they saw the rest of the market take off and they were basically just on the wrong side with their yesterday's stocks, the FANG stocks and all that stuff, which got shredded. So they're trying to make it up. here's where that ties in with what I'm today's lesson and what we're talking about. Wanted to give a little brief updating because we had this presidential election, very important stuff. An event out of nowhere, kind of a one-off every 4 years that's going to affect the markets big time. That's a synopsis of what happened. Now here's what you got here. Look at this. So here's what's this? 1116. This is today's Nasdaq. So they kept selling off on the Globex, right? They couldn't prop them up. They tried. Look at yesterday. I'm just trying to show you. I'm showing you some market theory here. Look at this. So here's the opening. This is a West Coast chart, 6:30 my time here, and so here they are pushing the Nasdaq up. And I put out the word yesterday in our room. I said, it's still bullish. Nasdaq's now trying to play catch up, but as far as trading it, we want to keep hitting rallies because the underlying is shifting for the whole market. The underlying is shifting a little bit here, and I'm still bullish, but the underlying is starting to shift to a sell rallies. To me, the bias is bullish, bullish, higher to go, caution, bullish, higher to go, caution, sell rallies or sell big bounces, bullish, sell bounces, like a little more serious, and then neutral, sell bounces, keep selling bounces, rolling to bearish. You get the idea, and vice versa on the sell side. You kind of look for those different levels. So lo and behold, you can see what happened. It was good advice because as they tried to pump up the NASDAQ, and it'll tie in with what I'm going to show you about how to trade with Boomerang during this. But look at that. Here they come back in, smashing the NAS down. So now here's the sign that the riggers are getting a really bad case of sour grapes. They didn't like that. They didn't like this at all. In fact, it pissed them off, to be honest with you. Pardon my language, but we're traders. We can talk like real traders. So they came in like a bunch of angry hornets here. And I only say that because recently, unfortunately, I love bees and I want to populate the world with honey and stuff. But this swarm grows so huge. I finally had to call the bee guy, take care of it, and he got part of it taken out, but he had to do some spraying too. And when they did, it was like an angry hornet's nest. They were just flying around everywhere, going crazy, as we had to remove them. Right? Well, that's what the NAS players were like, an angry hornet's nest. You cannot trade this on Boomerang, and if you do, you may try one trade, but then when they start spiking around and all this, my simple rule is if the prices are moving too fast or they're just going crazy spiking in a whipsaw fashion, you just stand aside. Don't worry about this. You may or may not catch this, but after what was like, this was yesterday, 8 o'clock to an hour and a half of this, you probably aren't going to catch the sell-off because it just, it finally kicked in. And trust me, I was trading them yesterday. We did okay, but it was not easy. And I'm going to show you something else in a second to compare. It was a little rougher day because of all this angry NASDAQ traders. And we're NAS traders. That's what we specialize in, Boomerang. So you got to just look around and see what's going on. Finally, they sold them off, and what happened? Bzzz, here comes the angry bees, and they just ramped it back. Sour grapes all the way, which is fine. We can catch the rallies, we can catch the dips, we can use our methods for trading take 2 to 3 trades out of a big move like that. Not even a problem. But then they got hit with selling coming into the close again. And then let me just quickly show you today. More sell-off because of what? Sell rallies, sell rallies. That was the clarion call for my bias reading. So today it was the same thing, but they sold them off on Globex, ramped them back up again. Here we go again with the rigging coming back in, trying to ramp them up. The market's already bullish. It needs a break, but these guys are going to come in and do the old stuff of the last 8 years, which is when in doubt, just rig the market up, throw a bunch of money at it. And sure enough, selling the rallies was very fluid, had a lot of good action in it. Keep selling those ramp ups. Then here comes the angry whipsaw bees again. Another push higher, and very choppy. But notice the choppy, hence the point right now. We have a method that we use in the room. It was developed back in February 2nd, is when I did the report on it, and I talked about it at these meetings during January. What was happening during January and February of this year? That's right, we just talked about it. Massive, the Fed decided to get cute and try to raise interest rates. They were getting so mad because they just couldn't gouge us for enough return on the money that they got out there, the trillions of dollars. So they tried to raise interest rates, just drove the market to the slaughter level, and it just got roasted. If you go to Boomerang, day trade, boomerangtrader.com, you go to resources, you'll find this in there. The bunker, it's get under the bunker when you're just under fire on all sides and the grenades are going off and the bullets are flying. The best thing to do is get in the bunker, duck down, and just be as safe as you can. And if you can poke your head up and make some shots, that's great, but be careful. And the bunker method, again, you can watch this video I made on it, but I'll give you a brief synopsis for mini NAS, and then I'll go over something else. I'm not going to get into a whole bunch of stuff right now with this, but the bunker method, which is very similar, practically speaking, it's exactly what we do only with the crude oil trades, but with the bunker method, you're letting all this noise get out of your head. Now, you know the rules about fat channels and all that, but all you're doing with the bunker method is only trading setups where you have your trade channel open up, obviously. You let that candle close, and you're only trading matching dynamic trend bands that have crossed over. You can trade them if they're just crossing over, but mostly you're just waiting for the colors to match because there's your 3 points with as much ease as possible. If you start, here's another example here. Don't try to get in this trade too early. Just wait. There's the matching dynamic trend bands, the pullback signal line, and there's your 3 points. This was late in the day too, but I'm just giving you examples. Let me go back over today to give you a reason why that's such a good deal. Here's a crossover. You can trade crossovers. They're pretty rock solid, or wait for them to match. Pullback signal line, 3 points. In a big trend move, you can, if you get the right setup, you can also trade the trend move trades. But the main idea is don't even worry about those. Just be safe. For God's sakes, this is treacherous now the last couple days because of this conflict. And it took me telling you this whole story to really get the theory for you to understand what's going on. It's not 2008 or 9 or even 2012 anymore, or 2014 or 15. It's a whole new deal now, and we're going to just have to adapt. Now, I'm not saying you have to use a bunker method every day for the rest of whatever, just until this crazy whipsaw kind of settles down a little bit. That's all. See here, no trade here. Don't try to get into this trade, even though the spread is tight and all that. Just forget about this. Watch for the bunker trade. Just watch for I'll go through the session today. Watch for the crossover here, exact crossover. Trade that right there, 82 short, coming down. 10 points, big clunk. Wait for the trend bands to match. When they start whipsawing, just ignore them. Just go take a break, go take a walk, go outside, play with if you have a pet dog, give them a paddle, throw some stuff around, come back. If you got it on your phone, you can watch the chart. But the main point is just take these trades with the matching dynamic trend bands. That's a bunker method. Here's another example. Buy, matching, buy, up they go. It's beautiful. It works so good. And that way, you're going to have less trades, but you're going to stay out of trouble. But if you're in here thinking that it was last week when everything was rip-roaring bullish, and this underlying change that I'm saying is coming not only in the underlying bias, but these nasty B NASDAQ guys are just really angry that they got crunched and they didn't really get to participate in this big bullish market. See, they still think NASDAQ's God's only gift to the market, and they have to realize that that's still there, obviously, but that was, the era of basically the last 4 years or so. it's still there. There's all kinds of new technology. I'm not saying that. I'm just saying this infatuation with the FANG stocks and all that. That's old. People were just thinking that's happening now. They missed the boat. You got to just let that go and start looking for new industries and all that. And I'm not going to hint at that because we're just here to talk about boomerang. But for right now, and this was the yesterday's market, I'm just going over the bunker trades and do this probably through Thanksgiving even. Just kind of watch the action, watch the whipsaw, but consider doing it till the end of Thanksgiving next week. Friday's usually the day after Thanksgiving, not a good day to trade, half day in the markets. Forget it. Stay, just enjoy your time off. Come back the next week and then see if things have settled out a little bit. See if the good cheer of Thanksgiving's there and maybe some of these rioters go home to mommy and stop complaining and just all this stuff, you know. It's like it's that same crowd that was protesting Wall Street, you know, Occupy Wall Street. What's the point? They find the cops had to round them up and kick them out because they're just loafing around, you know. I mean, it didn't really make much sense, but this is a little more dangerous, but it's affecting the markets right now. And that's all we care about, you know, not politics. You got to be a little bit agnostic when you're a trader. You can't get too involved emotionally in that. Got to just trade the markets for what it is. And this is what I'm saying, where everybody got emotionally involved in thinking, oh, they don't like Donald Trump for some reason, therefore gold's going to rally and the market's going to get crushed. And they got crushed because they just were too attached to mixing their political views with what the reality of the market was. Anyway, I hope that made sense. So we're going to get into this now a little bit more. Here's, you just missed this one here because this is, again, this is NASDAQ, people. This is from yesterday, jamming the market. Notice that hard jamming of the spikes. Look at, they don't even pull back the sig line because they're being jammed up so hard. That's basically market rigging happening here. Matching dynamic trend bands. That's where you want to buy them. Just ignore everything else and just buy matching dynamic trend bands. Or exact crossovers are okay. Like here, yeah, you might have caught this one, but otherwise you missed it. Ah, so what? Remember, though, there is the rule that is very valid for this. If there's a crossover and there were no pullbacks to the signal line within that period, you can trade a pullback to the Cobra. That's one of the rules. We've talked about that many times here in the room, and you should write that down and know that. And you want to, you know, the closest move to the Cobra you can trade. Now notice here they came right up to the Cobra. You missed getting in here because they fell off the wagon, but you had a pullback to the Cobra right here. Now here you have a what's called a trend trade where the dynamic trend band number one crosses a Cobra immediately. This it happened on this candle. You want to take the immediate next within the one, two, maybe three candles, any pullback to the Cobra and reshort it there. In this case, 59 coming right back down to 53. You don't get tricky and try to do it again. You can if you want, but I tested this rule. Took me many lost weekends before I released it to all of us here. And the third level trades, they'll work out like this one, but they're not as reliable, so you want to be careful with those. Again, if they start whipsawing, you know the rules on whipsaw. And if not, I have a special video here that will help you if you're brand new to trading and or you're considering buying boomerang or you've already bought it and you're new to it. Make sure and read all the reports in this resource section because I've got here a special report how to manage congested areas and whipsaw in the market. All this stuff, I've recorded a lot of this very valuable archives of things to show you that will help you in your trading. I'm sharing my experience with you for free. There's no charge. These are free videos and insights that you can take great advantage of. In fact, I do, you know, I've been doing that for many years here and I like doing it. It's fun. I like helping traders. That's always been our mission. That's why we haven't raised the price on Boomerang. I could get $5,000 for Boomerang because you can pay for it easily in a month, but I don't. I kept it at the same price. I haven't released any new indicators either. A lot of these vendors, you see them out there, they're always got new indicators every month. They're putting out new stuff because that's how they make their income. They don't make it from trading. But with that, let me make a brief announcement. I am going finally after about a year and a half of research. I'm coming up with a new thing that is so unique. It's so beautiful. It's very simple like Boomerang, but it's very unique. It's called the Boomerang Roadmap. It consists of 5 indicators, but it's mostly combining it all into a way that will give you access to reading the market that like you've never seen before. It'll absolutely blow your mind, the accuracy of the new stuff I've added in here. It's a separate thing. You can use it for any stock, any future, any time frame, but it's called the Boomerang Roadmap. It's designed for Boomerang. It will tell you exactly when the market's getting overextended, and it'll give the main thing and the value of it. It's only going to cost $2.95, is that it's going to show you exactly. I've already done the videos and everything. There's like a lot of about 2 hours of training on there and everything, but it's going to show you how to catch the big moves in Boomerang. I've been promising this for a while because our core method, which is very valid, and you don't need the Boomerang roadmap to trade with Boomerang, but our core method is to go in on the US stock indexes and scalp 3 points. Use the trend trading method to scalp some more. Here's another trend trade uh, here. And you might take 2 to 3 trades out of one big move in some cases. However, the main point is that the roadmap is going to tell you exactly when the market's getting exhausted, and it'll let you know with crystal clear information, watch for a larger Boomerang trade. It'll show you what level in the market of that living market, you're all living, breathing levels that are printing out as you're trading and the market's moving, and it'll tell you, and they're so accurate, it'll just shock you. It'll tell you, okay, I'm going to get in this Boomerang trade here. The roadmap's telling me that it's very exhausted up here and very good odds that it's going to pull back to somewhere between 58 and 60. Very good odds, like 70, 80% odds. So when you get in this trade, instead of looking for 3 points, you're going to let that, not this one because this is the end of the market. I'm just giving you an example. You get in that trade, you wait for the right setup. You're going to come in and say, I'm going to hold, and you'll have an exact specific number to target. Or you can just start out, instead of taking 3 points, well, I'm seeing that this is extended. I'm going to trade for 5 points. Or you can say, well, I can see that the Boomerang roadmap's telling me odds are about 80% the market's going to go down to this level of say 61. Well, what I'll do when I get short up here at 72, I'll just look for 8 to 10 points. I'll scalp them out at like 64 to 65, and then they drop right down in this area. How much money is that going to put in your pocket trading with Boomerang if you have the roadmap, which again is $295? That's peanuts compared. You make that in the first trade. But I've put this together. It's been a year and a half research. I'll be releasing it. I mean, you can order it now, but I just don't even have the forms ready or everything. But I'll start doing that, and it'll start slowly coming out. You'll see promotions for it and everything like that. You're going to love it. You'll be shocked and amazed. And you know me, Boomerang, how good it is. Well, it's been the last indicator I put out was Hyperscalp, which is, I mean, I have people, emailing me to this day going, "Oh my God, Hyperscalp's mind blowing." So you can buy in Hyperscalp just by itself with the roadmap, and you'll be quite amazed. Anyway, moving on. Now I'm going to move to another subject. Now, keep in mind, all this recent whipsaw stuff caused not only that, but just be aware of this. This is called the changing markets. This election thing came up. We were getting an average on crude oil, 5 on the low end, and up to, average 9 to 15 crude oil trades a day, right? The crude oil method's very simple to use, and I can go over that in a minute, but I'm just saying, just be aware. I mean, it's not my fault. It's not Boomerang's fault. The markets came into November and shifted, and now it's like pulling teeth to get about 4 or 5 solid crude oil trades out of the market each day. That's still a lot of money. That's still a great paycheck, even on one contract. However, just be aware that because of all this stuff going on, things shifted. Crude oil started selling off. I don't think that's the reason. It still trades very actively. Did today. Um, but I just noticed, over the last 2 weeks, it's been a lot lighter. It'll come back. There'll be more trading going on in crude oil, but just be aware of it. Be patient and just trade what you got and be happy. And besides, that's why we have crude oil and mini NAS. So if you're trading both those, virtually what I'm recommending for the bunker trades is the exact same method for crude oil, except we're still scalping 3 points using a 5 point stop, and crude oil scalps for 10 ticks with a 13 tick stop. But just keep that in mind. So the next thing I wanted to say was right at the height, and this will blow your mind if you haven't heard about this already, at the height of the volume and everything like that. You've heard me complain about the riggers. Obviously, they're there. Now all these billionaire managers have jumped on the bandwagon, joined Mohan and said, hey, they're rigging the markets up, right? Okay, well, that's a fact. However, there was an amazing day, and it was last Thursday, and I was in the room, and the prices for the first, it was like we came back, the election hit like a ton of bricks. Tuesday, excuse me, Wednesday, the flurry started, came in trading on Wednesday and on Tuesday, Monday too, but especially on Tuesday and Wednesday, and the markets were just going nuts. They were trading at hyper high speed. You were probably there with Boomerang. You saw it happening. It was so fast. My rule is generally to just stand aside, let it calm down. Well, it didn't calm down much. So finally, lo and behold, on the 10th, I said, well, we're here in the room. I said, okay, guys, we're going to trade. If you want to trade, these are voluntary trades, but they're going to be real trades. I'm going to give you exact signals with Boomerang and some of the other micro scalp methods I use. Get in here and use a 10 tick or 10-point stop. You got to use a 10-point stop because they are flying fast and furious, but we should be able to do better. Well, lo and behold, I traded on that day, on the 10th, and made 131 NASDAQ points live in front of a large group of traders. And our 10 tick stops never got hit once. They didn't even come close. The entries were so accurate. And I sat there and I went, oh my God, this is exactly like the days before they were rigging up the markets. This is good old-fashioned, high volume, buying and selling flow. The riggers couldn't even get involved because it was all moving so fast in both directions, flowing from up to down in beautiful, wonderful, swinging waves of glorious volume, and no riggers involved. And I put together 131 NASDAQ points on eight trades. I'll just read them off to you. I'm not saying this to brag or anything. I'm just trying to tell you that it's kind of confirms what I'm saying. We got to face rigging's always going to be here. They're always going to keep playing that game most likely, and you can't wish it away. I sometimes feel like I like to by cursing at those idiots, but it doesn't help. They still do what they're going to do. But the point is that the trades, I'll read the amounts that I got. 10 tick or 10 point stop, long at 24, out at 42 plus 18. Long at 46.93, out at 47.23 for 30 points. Short at 47.28, out at 16 for 12 points. Short at 47.25, out at 18 for 8 points. Long at 47.02, out at 47.26 for 24 points. Short at 27.24, covered at 14 for 10 handles. Trade number 7, there was 8 of them, all winners. Short at 47.37, out at 22 for 15 handles, and short at 30, out at 16 for 14 handles. needless to say, I was quite thrilled, and I just got in sync. I got like in a zen-like sync state with the markets, which I try to do every day, and it's very difficult, as you all know, when they're rigging those markets. A lot of times it drives you nuts. Like today and yesterday, you just start, these angry little Nasdaq bees, had poison thrown on their nest, their little secure nest of trading these goofy FANG stocks over and over and over, and they just create a lot of problems. So I just wanted to show you this, not to brag, but just let you know that not only do we do fantastic, but the and you can't expect this. I don't know if I'll ever see another day like this for years to come, maybe, but you can't do this every day. It just the flow was there. It was like a real market, like the old days prior to 2004. It was beautiful. I used to have 30-point days all the time back then. But anyway, just wanted to show you that. You can watch it on YouTube if you want. Now, not all the trades are on here, but there are two live ones. The last two big trades, 15 points each, I think, are recorded live on here. But I was just doing a recap, and I said, "Oh, here's some more. Let's trade them again." So anyway, it's all real, but I just wanted you to see that. You can watch it again on, it's just go to youtube.com, Day Traders Action Live, Trading by Mohan. That's my page for that. I put them up every now and then, kind of spontaneously record stuff. Somehow I go, oh, hey, I should just turn the recorder on. I turn it on, and, I record losses too, losses, gains. Hey, the futures business, I get people sometimes that are brand new, they just don't get it, and they're, well, you lost. And I go, what the hell are you talking about? This is futures trading. This is part of what we do. Loss is what we do every day. Obviously, you want the gains to be bigger than the losses, and that's what the whole purpose of the exercise is, to develop yourself to that point using boomerang to where you get 80-90% winners all the time. Anyway, so I just wanted to point that out. So, having said that, I think I covered a lot of the main things that I wanted to talk about, which was it's a different world right now since the election. The last 2 days, the market's in a major arm wrestling match because if the NASDAQ guys are trying to catch up, they feel bad they missed that big bounce. And they don't want to see the market crash a little bit here now, have a $200 down day or something because, whoa, we didn't get a good chunk of that bullishness. It was all, the old stodgy transportation index and the industrial average. The stocks that are going to rebuild America, the infrastructure stuff. Look out. And by the way, if you're interested in stuff like that, you can, if it's something that you have been wondering, the two I'm long in now, small positions, just building them up, building them up. XLI and GHII. Repeat that, XLI and GHII. You can write those down. They both pay dividends, especially GHII, 4% dividend. The other one, I think, 2%. Those are key infrastructure rebuilding stocks, ETFs. You can buy one ETF, get a whole basket of infrastructure. Because that idea is obvious now, probably a little pullback. That's why the key is try to buy it on down days in the market, dip into it, and build up a position at the comfortable level you're at and hold on to it. And I think over the next 4 years, we'll see tremendous stories coming out all the time. Such and such bridge being rebuilt, the so and so highway, has got the crew out there. I think that'll be a lot of the news stories in the future. So, with that in mind, I'm ready to end this session. I've discussed this for an hour. I spent mostly talking about theory and what's happened in the markets to protect you and help you. The main takeaway from all that was to work the boomerang bunker setup. Just trade it like crude oil. Wait for the dynamic trend bands to match color or cross over, and like right here, you see, and it'll be a lot safer. The glory days of last week, which I just showed you, I had a personal glory day there. It are probably gone for a while. It was just a reaction to the whole thing. The volume was off the charts in the mini NAS because, as you know, you should always have a volume meter running. It's like a tank of gas. You wouldn't drive a car without a gas meter, right? I mean, you're driving your car along, you got this new car, and you got your boyfriend or girlfriend in the car with you if you're a gal, and you're going, honey, how do you like my new car? And he says, wow, baby, you got a beautiful car, and you've been driving an hour and got the radio on. He says, well, how much gas we got in there, honey? And she says, what are you talking about? Well, we've been driving for about an hour and a half now. How much gas you got in the car? Huh? What's that? You see what I mean? That's the level of cluelessness of somebody trading without a volume meter. You got to know how much gas is pumping into the market. You got to know that. So you can build a volume meter. I just want to throw this out because I got a lot of good resources here. If it's a surprise to hear this, and I know most of you it isn't, but if it is a surprise, don't worry. Help is on the way. Go to boomerangtrader.com, resources. Scroll down because it's on our second page. Go down to page 2 here, and lo and behold, you'll find it there. How to build a volume meter, how to set up the volume meter. It'll give you ABC steps on how to set up a volume meter so that you can have that running. My volume meter when I'm trading is about like this, very, very small. It's totally out of the way. I just glance at it. There's no method or trick to it. You just read the report, and I'm glancing at this top one here, which is a 4 period moving average of the volume. This is the individual, it's a 1 minute chart, 1 minute candles of volume, and then this smooths it and averages it. And I've got these levels on for NASDAQ that I know are good. When I see that volume start dropping down under this magenta line, what to speak if it starts dropping down to 150 contracts? Like here, there was a little dip under it. They're down around 280. That's okay. You're still fine, but they start dropping down around 200 or lower. Be careful. Or if you put on a trade and you got a lot of confidence in it, hey, congratulations, that's good. Boomerang will set those up, but just make sure and realize it may take a little longer for that to pan out. Look here, 157 contracts, that's going to be a slow deal. That thing's just ticking away, tick, 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 like a dripping faucet. And then eventually the volume kicks in, and there they go. They move in your direction ideally. So keep that in mind. It's very important to have the volume meter. And with that, again, if you have any questions, I can go over charts or whatever you want. Unlimited time here, but we'll go ahead and end the first part of the session right now. And thanks again for joining with us.